those are all very nice. If you saw those in an investment that you were looking at, that would be attractive for sure.
And I think that insight about if so much of the profits are coming from abroad, it's maybe naive to assume that Zin will just be just as successful there as it was here.
All right, folks, welcome to Investing for Beginners podcast. Today, Andrew and I are going to do a bird's eye view, and we're going to take a overview look at the company Philip Morris, one of the tobacco giants. And we thought we would kind of look at their financials, maybe talk through some of our thoughts on what we see, our thoughts on the company, and just kind of go from there. So, Andrew, do you want to maybe fill people in on, if they haven't heard of Philip Morris, maybe what they do a little bit?
Yeah, happy to. So Philip Morris Cigarettes Company, they own Marlboro, a few other brands. They also make the popular Zyn, the ZYN nicotine product that is very viral on social media, TikTok. It's in my Instagram feed, and like if it's in my Instagram feed, that means it really got popular because it takes a long time for things to get from TikTok to my Instagram feed because I'm so behind the times. So that tells you something that Andrew's aware of Zyn. And so the question becomes, you see a hot trend on TikTok or wherever. Does that mean that the company that makes that product is a good investment? We don't always have the answer for every single business, but I think it's helpful to look at big picture numbers to sometimes help you decide whether that's the case or not.
Yeah, exactly. So if you had to categorize Philip Morris from a big picture overview, where would you say they are in maybe their evolution as a company?
For me, I would say a mature company. And the reason why I say that, a couple of factors. When you look at their top line or their revenue growth, over the last 10 years, that revenue CAGR or compounded annual growth rate is around 2.5%. Even if you look at the last, let's say since COVID, which includes their whole spike from Zyn, I think FinChat had them somewhere around 4 to 5%, which that's not like tiny. We're not talking about like slow moving, mature business, but that's also not a faster growing one either. And then the last thing, one of the first things you see when you open up this 10K, the annual report, is they have a lot of different bonds that are listed that people can trade on the New York Stock Exchange, and the interest rates on those are pretty low. So that means the company has a low cost of capital. Bond investors feel comfortable letting this company have some of their money. And so usually that's the mature type of businesses with more stable cash flows that are able to borrow at low interest rates. And so those different factors to me tell the story that this is more mature.
Yeah. You could probably argue that the tobacco slash cigarette industry is probably on the more mature side, and the revenue growth rates that you were talking about would probably make a lot of sense when you kind of put two and two together. You do get four in this case, not fish. So it makes some sense. If you look at just a broad overview of the financial picture, we can dive into more specifics here in a minute. But like, does anything jump out at you as like good, bad, indifferent kind of thing?
Margins are kind of interesting. What did you see with margins?
I saw some nice fat margins there. I kind of quote the Big Short. Bet your margins are fat. Let's not talk about my margins. Sorry, I've seen that movie far, far too many times. Uh, but if you look kind of without knowing much about the business, if I looked at those margins, I would love to see those on a lot of investments that I look at. 65% gross margins, operating margins 35%, net income margins almost 20%, free cash flow margins 28%. Those are all very nice. If you saw those in an investment that you were looking at, that would be attractive for sure.
Yes. Yeah. So this was, I almost feel like I'm spilling the beans now. This is like the big insight I saw from looking at FinChat. FinChat has the different KPIs,
Mhm.
and one of the KPIs that is included in this company is revenues and profitability by geography. So
Mm,
profitability being EBIT, or earnings before interest and taxes, also known as operating income. Very surprising to me, out of all of their income in 2024, only 548 out of 13,000. So that's 548 million out of 13 billion came from the Americas.
mm.
Like, wait, hold on. Like, I thought this was the American centric in me thinks
Yeah, it's an
these are
American-based
the people,
company. Yeah,
smoking marbles all around me are the ones. And actually it's not the case. This is almost an American export. Who knew that America exported cigarettes? I mean, maybe a lot of people did, but I certainly didn't. I did not think of
mm,
Philip Morris as a such an international company that they barely generate anything from the United States.
right. Yeah, I mean, we were talking, if you look at the operating income of the business, what they've generated from the United States is kind of borders on not material. Like, it doesn't really have a whole lot of impact on the business, and it kind of surprised me that it was that low. We're talking 548 million, and when you think about the fact that they did, as Andrew said, 13.2 billion in operating income and almost 38 billion in revenue, that's kind of a small amount that
Yes.
really comes from the United States. When you showed that to me, that really jumps out as a, not anomaly, but I guess it was surprising to me that, so if you were, bottom line, I guess, if you were buying a company like for Philip Morris with these kinds of geographical breakdowns, you're definitely buying more of an international business than you are something here based in the United States. And so I
Yes.
think that would be something you'd have to take into consideration when you were thinking about investing in a company like this.
Yeah, which already puts it out of my too hard pile
You're
because
right.
I don't travel enough to be able to tell you if the sniff test has said that things have changed with this business.
Right. Yeah. Yeah. If I think a little bit about it, it makes some sense that the company is not generating a larger proportion of their revenues from the United States because there's been a huge movement towards anti-smoking here in the United States. And I don't think globally that has been as big a case. And if you look at European revenues and you look at revenues from other parts of the world that are represented with this company, you see a much bigger proportion of their revenues from there. And I've traveled to Europe and I've traveled to South America, i.e., Brazil, and both of those places have big smoking populations. It's a popular thing, and so it's different. And I'm not casting judgment or blame. I'm just stating what I've noticed, and so it 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 makes sense. If I think about it a little bit, like, oh, okay, that makes sense. But on the outside, thinking, okay, hey, Philip Morris, American company, we're obviously going to be the big market share, and that's not the case at all.
It really isn't. Yeah. So definitely makes you, if you are just looking at the big picture, makes you think, okay, I need to look deeper into some of the
Mhm.
details behind that. And whatever I'm assuming maybe needs to change.
Yes.
What else stood out to you kind of looking through this business?
I think a few things. Number one, from a higher view of their capital allocation, they're not a buyback machine. They don't buy back shares much at all. So their capital allocation centers way more around a dividend payer, and they do pay a good dividend, and the yield is decent as well, and so that's attractive. And I've heard other people when they talked about this company, that's one of the more attractive features for dividend investors, is that it's a stable company, pays a stable growing dividend, and has for a very long time, and so that's attractive for those kinds of people. They have a pretty good chunk of debt, and they spend a fair amount of money trying to reduce that amount, but they also issue more. So to your point, when you saw what you saw in the 10K, they're issuing debt, and without really digging into the financials, I'm not entirely sure why, but they have issued a fair amount of debt. I'm not sure if it's acquisition based related or if it's to pay the dividend related because they don't generate enough cash flow, which I don't think that would be the case with those really high margins. So there's reasons they do what they do, but if I just look at the capital allocation portion of the business, to me, it looks like they spend a lot of time paying down the debt and giving a dividend back, and that's where they are. And it probably makes a little bit of sense because they're more on the more mature side, and so they probably don't have tons of growth opportunities. But we could talk about that kind of idea too. I think that would be interesting to talk a little bit about the Zyn, like what your thoughts are on that, and kind of how that's could play out.
Right. So, like I said, one of those things that you see very trendy. If we go back to FinChat and look at the different KPIs, they show a chart for Zyn US shipment volume. And so that chart is bananas. It's like an NVIDIA chart or a Tesla chart, just that roller coaster, roller coaster up, like rocket ship. Uh, since 2017, basically doubling every year. If you take it back to 2019, 63% annually compounded. So, yeah, insane shipment volumes. And so that's where it kind of goes back to that original question, right? If you're buying a company like Philip Morris and maybe your friends use Zyn or you're very familiar with Zyn, you think, oh, I can buy this stock and get exposure to that trend. You have to double confirm that narrative with the numbers. And so, yes, the number of Zins that they're shipping is rocket ship. However, remember this is a US number. So this is US shipment. That's rocket ship. It went from 4 million in 17 to 50 million in 19 and then 581 million in 2024. So obviously, again, exponential growth. However, if you look at profits from the Americas segment over that same time period, they have not grown at all, which I find kind of strange. Since 2019, they doubled, but after 2020 and beyond, it's kind of been like this flattish 400 million. And so that begs the question, all this shipment volume that the Zins are doing for the business, why is that not turning into profits? Is this just like a hype machine that's just built on marketing dollars, right?
Mhm.
Like, I don't know the answer, but that leaves me scratching my head that I can see somebody looking at the Zyn and being like, "Oh, it's a publicly traded stock. I'm going to buy some of it because I think Zyn's I
Mhm.
think Zyn's going to take over the cigarette world." But if that's the case, and if it's so successful for Philip Morris, why are their profits from Americas so small? And then why are those profits not moving from 2020 to 2024, even though the number of shipments went from 114 million to 581 million?
Mhm.
Something just doesn't add up there.
Right. No, it doesn't. And to give maybe a little more further context into where the whole Zen thing came from, Philip Morris acquired a company called Swedish Match, who was the parent company of Zyn for 16 billion in 2022. And that explains where the whole debt thing ballooned, is because prior to that they had fairly manageable, pretty low levels of debt, and they used a lot of debt to buy this. And so Swedish Match is the company that produced Zyn, and this was part of Philip Morris's strategy to kind of start to move away from traditional tobacco products and move towards alternatives like nicotine pouches and heated tobacco products, whatever that is. And we also saw in their KPIs, they have some drinks related to nicotine as well, which does not sound appealing at all to me, but it's, call me fuddy duddy, but that sounds, ugh. But anyway, I'm not a fan of smoking. And so the thought of putting that smell in my mouth and drinking it on purpose does not sound appealing at all. I'm sure it's fine, but
Right, right. Well, I did smoke for a long time, so we're balanced out there.
right.
Between me not
Okay.
smoking and me smoking, we have a balanced conversation.
Right. I think that's a really good insight. I when we were talking about Zyn and its impact, I didn't really think about the fact that the earning profit that the company's made has not budged, even though they're seeing a big move towards more units being sold and consumed. Like that doesn't pass the sniff test real well.
No, and then going back to big picture, if you look at the trend in operating margin, you saw some elevation in 2020, 2021, and then it started to decrease into 22, 23. So you may look at something like a Zyn versus a cigarette, and maybe to you, logically it sounds like, hey, this is better, higher growth story. But if those margins are less than cigarettes, and I don't know what the case is, we're just looking at big picture numbers. It could be a myriad of things. But if those margins are less, then revenue growth doesn't mean the same amount of earnings profit growth. And
Mhm,
so if they're having to cannibalize themselves, it's usually not great for investors when
mhm,
you're cannibalizing yourself for a lower profit margin product. I mean, obviously, you got to cannibalize yourself, otherwise, somebody else will do it for you if you want to stay on the cutting edge as a business. But that said, if that's the case, and I don't know for sure, but if that's the case, that Zyn is a lower profit margin business and then that's going to take over cigarettes, that's not good for Philip Morris. That's not good for the industry.
mm-mm. No, no, it's not. And if you dig a bit deeper, we could see in 2021 they did 1.8 billion in revenue in the Americas, and in 2024 it was 4.5. So that's, I don't know, I'm not sure what that CAGR is, but that's a nice growth rate
Yeah.
for sure over those 4 years. But to your point, if you look at the operating income in the same region, it's flat. If anything, it's actually gone down. And
Yeah.
so that would tell me that they're either giving it away to help stimulate growth and excitement around a particular product. And so the markup or margin that they're offering the product for, let's say, I have no idea. I'm just going to throw out a number. Let's say they sell it for $10 and it costs them $10. They're making nothing on it.
Right.
And so it creates a buzz, which is great. But if they can't make a profit off of it, at some point that has to turn. And if it doesn't meet the 65% gross margins that they were doing before, then it's just the growth would be destroying value for shareholders. I think is probably the easiest way to say it.
Yeah. Yeah. And I mean, you can make the argument like that was the growth algorithm back in the days of easy
Mhm,
money, but are there
mhm,
really network effects for something like this if it's not? Like, we're not talking about a technology company with network effects.
mhm.
So can you use that same growth algorithm? Color me skeptical.
Yeah, yeah, me too. Yeah, me too. The other thing too is it it looks at this point kind of immaterial to the returns that shareholders should expect from the company at this point. And, until they can turn that faucet on, then I think it's it feels like hype for the sake of hype and not actual benefit to the business or the people that invest in it.
Totally. And I mean, we didn't go deep enough to look at earnings call transcripts or anything.
Mm,
I did kind of poke around their slides. It didn't seem like they were hyping it, but if they were in the earnings call, that would be
disturbing.
a little bit. Yeah, it'd be a
Yeah.
little aggravating if I was looking at
Right.
this company
Yeah.
seriously.
I'm pretty confident that even though they may not be hyping it per se, it's certainly probably part of their investor relations that they put out there as this is something that we're embracing as part of our growth strategy.
Right.
As we try to pivot away from cigarettes and the importance of cigarettes to our business. It's especially here in the United States because there is such a pushback on the whole smoking thing. And so I'm sure that's put a hurt on them and they've had to figure out ways to try to move away from that, at least here in the United States.
Yes. So I was curious while you were talking because one of the ways you can start to double check the narratives that we are building about what's going on with this business. Another good one is SG&A, or selling, general, and administration expenses. And so to Dave's point, if they are giving it away to try to generate buzz for the product, you'll probably see that show up in SG&A. From 2020, and this is for the entire parent company, from 2020 to 2024, SG&A grew by 11.7% annually versus revenues at 7%. So
Yep.
definitely that SG&A is growing faster
Mm,
than the actual sales. If you take that back to 2019, it's 7 versus 5. So
mm,
you are getting SG&A that is increasing and sales are not picking up to match that, which explains those margins kind of inching down from an
mhm.
operating margin perspective. So they've gone from like, let's say, a quarter of revenues is SG&A to like a third
Yeah.
almost.
Yeah.
So yeah, it's starting to get they're definitely in this like we are going to spend a lot to try to market our
Mhm.
products.
Yeah. And this is the reverse of what you want to see as far as like operating leverage, right?
Yeah.
Because they're going in the wrong direction. They're spending more and the revenues aren't levering up relative to what they're spending more. So, in layman's terms, they're getting, at this point, they're getting a worse return on their investment. So every dollar that they spend on SG&A, they're not getting the same kind of dollar for dollar return for a revenue of sales and profitability. And as a dividend paying company, that one of the attractors to a lot of people is the dividend payment. And at some point, that could start to impact how much do they continue to grow the dividend, because if they don't have as much cash flow, that could all filter down to that and leave less on the table, so to speak, to pay a dividend or pay a growing dividend.
Yeah, that's exactly right. One of the metrics, if you're a dividend investor and you're curious about how safe is the dividend, the payout ratio, we've talked about that before, but it takes the dividend per share and you divide it by the earnings per share. So, how much are they paying out in dividends? How much are they making in profits? And so I'm actually getting different numbers from QuickFS and Seeking Alpha. Seeking Alpha said something like at 80%, and QuickFS shows payout ratio between 85 to 115,
Oh,
depending on what year you're looking at over the past 10
mm,
years. So very close to all of profits have been going towards this dividend.
mhm,
And so to your point about that acquisition that was made to buy the parent company for Zyn, that was fueled by debt largely,
mm,
because in 2022 they took out 14.1 billion in debt that came into the cash flow statement. So it is very interesting. That's just this dividend. It's just like a almost like a bond substitute. It's just
right.
all the profits
Yeah.
are going to wasteful SG&A and then the rest go to dividends.
Right. Yeah. Exactly. And if you look at the 16-year return for the business based on what I can see here at FinChat, I don't know if this includes dividends or not, so you have to kind of take that into consideration. But it's 6.9 to 7% return over the last 16 years. And if you add dividends, then obviously that will be a little bit better, but still that's not matching the S&P 500 over that period of time. If I was going to invest in this company, I would have to think about it differently in my portfolio. Like, what is this company accomplishing? And it would have to be more related to dividend income as something that could provide me income in retirement, as opposed to something to necessarily grow my wealth per se.
And what makes you say that? Like, what's the biggest factors that lead you to conclude that?
Two things probably jump out. Number one is the revenue growth over the last 10 years has been not great. The last few years has been better, but it's still not awesome. And it's a mature company. And so the expectation of them doing a pivot, the expectation for them to come out of the gate swinging with Azure, like Microsoft did, and having 300 and 400 billion in revenues in the next 5 to 10 years is probably unlikely. And so I think you have to conclude that if I was going to invest in a company like this, I would be looking at it for the dividend, and that would be the vast majority of what I would expect to get from this company. You mentioned like a bond substitute. It kind of feels like that. Like it's stable. It's not going bankrupt anytime soon. It's not going to get big growth numbers, and so I'm not going to expect a lot of share appreciation along the way, because there's not. I mean, yeah, the Zen thing is exciting, but at what point does that materially turn into something that's really going to move the needle for the company? And if smoking is a bigger deal abroad than it is here in the United States, then you could probably maybe conclude that something like that wouldn't catch on in France, for
Right.
example, where it may be gangbusters in California here. So if US revenues are less than a quarter of overall revenues, if even if you move that up 10 percentage points, still not going to move the needle a whole lot for the company. So if I start adding those blocks up together, it feels to me more like a bond substitute as a company that I would consider if I was closer to retirement and focusing on the dividends as opposed to something I may buy at your age and hope it's going to grow my wealth until I retire.
My life's passion is to turn over as many rocks as I can to find the gold that's hidden underneath. To see a sample of a stock where I did just that, go to stockwriteup.com. Yeah, completely agree. I mean, that kind of anemic revenue growth suggests that they're maybe just keeping up with inflation. And so it's almost like one of these necessary grocery items more so than a hot consumer thing that is really being driven by discretionary spending, which is kind of sad in another way too, if you think about what that implies. But along with that, if you're paying all your profits in dividends, how do you grow from that? Like, what money are you going to use? Just to buy Zyn, they had to take out $13 billion in debt, 14, whatever the number was. You can only do that so many times until you can't. So it's going to be hard for them. And yeah, I'm kind of with you on that. And I think that insight about if so much of their revenues and profits are coming from abroad, where the attitudes on smoking are different than they are in the United States, it's maybe naive to assume that Zyn will just be just as successful there as it was here. So I do like that kind of insight. And it's hard. It is very hard. It's very easy to get excited about a particular aspect of a company. And you start to look at short-term growth rates or just a growth story in general. And then trust me, I mean, I do all the time also. It's like very easy to extrapolate that into, oh, I can see this being a 10 bagger for me or a 100 bagger because this is going to happen like this and this is going to continue like that. When you take maybe a more sober look ahead 10 years out and you start to put things into context, maybe that helps kind of tamper those expectations and bring you down to a reality that's more likely, I guess.
Yep. I agree 100% with all your assessments.
Yeah. Plus, smoking's bad.
Yes, it's very bad. It's very bad. And I would be out immediately because to me, this is a no-fly zone. I'm not a fan of smoking. I think it's terrible. And I would never invest in a company that does this. So I think it's interesting to look at the numbers and think about, it's a good exercise to think about that, but I would never buy it.
Because
smoking is bad, and I'm not going to encourage. Yeah, I'm not going to encourage smoking. That's, it's on my no-fly zone.
Yeah, I mean, I had my first cigarette at 16. I smoked on and off for like 10, 12 years. Smoked 3 years, half a pack a day. Quit for a little bit. Smoked 3 years again, half a pack a day. I finally quit when I realized that I was coughing every morning. And have been coughing every morning ever since. So even though the numbers say I'm not going to get lung cancer, I did not expect to have violent morning coughs for the rest of my life.
Right. Right.
I know I always sound like the boomer, right? 65 years old, 75 years old, who loves dividends. I'm 35 and I'm telling you, smoking can affect your life and it sucks.
Yes.
It sucks to cough stuff up every morning.
Yeah, I can't even imagine. I didn't have any direct family members that were affected by lung cancer, but I did have a couple of remote relatives that passed away from lung cancer. And so I saw kind of from the outside view the impact it had on the family and the family members. And I just, I've never smoked. I was fortunate. I never smoked, and I never had friends who did around me. Occasionally be out partying or something, and somebody would light up once in a while. But as a regular people, I didn't. When I was in the restaurant business, it was very prevalent, but I didn't do it, and never did. And I just, I saw people come in. I saw all the people hacking all the time. And I thought, no, thanks. Not a fan. I'm out.
I thought the hacking would stop once I quit. Yeah,
it didn't.
No, I mean it's gotten worse now. I'm like in between hucking a loogie and throwing up
Oh
and it's
boy.
all this tar coming up.
Oh god.
7 years later, it
Yeah,
takes
that's
that long
terrible.
for it to come
Yeah.
out.
Yeah.
And I relate. I mean, I really relate. Like sometimes your best friends all smoke,
Yeah.
and sometimes you go through periods in life where you feel like it's the only thing you have left.
Mhm.
But I'm here to tell you, like, there's other ways, more healthy ways to cope with downtimes, and
And stress and everything. Yeah.
yeah, yeah.
Yeah. For sure. For sure.
Well, and one of the things we like to talk about as investors, right, is this idea of we try to find businesses that can survive for a very long time, and we talk about life cycle of businesses.
Mhm.
It's tough to imagine holding a stock for 30 years if they are literally killing their customer base. It's just a
Mhm.
different type of investment.
Right. Yep. Yeah. I mean, I've heard it referred to in the like sin category,
Yeah.
like tobacco, gambling, alcohol, that kind of thing. And to me, this is just something I'm just not interested in. I don't want to endorse it, and so I just don't.
Yeah. Well, on that happy note, any final words of advice about companies like this, company in general?
Uh, I think I've made my my position clear on Philip Morris, but I do think looking at companies from an overview like this before you start digging into the numbers and trying to find positives and negatives if you can, I think is a good exercise, and that's what we're trying to do when we look through companies like this to just help you realize you can look at different things and think about them before you make a decision to either pull the trigger or do any sort of due diligence before you dig in.
Yeah. Yep. 100%. So that is going to wrap us up for today. Thanks for tolerating us on this show. You can send us your feedback or questions. How about just questions today? No feedback. Newsletter at einvestingforbeginners.com. If you are looking for your next step to grow as an investor, check out Value Spotlight. Connect, learn, and grow with Value Spotlight. Peace.